Kitco Mining special coverage of the Mining Investment Event of the North is brought to you by EMX Royalty Corp.
Precious metals companies have seen critical metals stealing some of their thunder and soaking up some of their investment. EMX is happy to play on both sides. Joining us now is David Cole, CEO of EMX Royalty. David, welcome to Kitco Mining.
Ernest, thank you so much. Always a pleasure to be here.
Always a pleasure to have you. So EMX is a royalty company that is metal agnostic. That's a little unusual. Can you explain what exactly that means?
Most of my career, the royalty companies were focused on precious metals. Now it's in vogue to be diversified. We've always believed that diversification was prudent. You're taught that early on with respect to your portfolio. It makes sense with respect to a royalty portfolio as well, in my view. But that came to us specifically because we're doing royalty generation work in mineral belts around the world, and we're not going to dismiss an opportunity because it's not gold. And so we naturally became a diversified holder of royalties, and particularly with respect to our royalty generation work.
All right. Now, can you tell us a little bit about some of the key transactions that built out the company?
Sure. So, the royalties have come to us via two mechanisms. One, royalty generation. That's prospect generation focused on the royalty component. So we acquire assets through staking and license acquisition. We're the underlying owner. We coalesce the existing data, collect additional data, illustrate the prospectiveness of that asset to an industry hungry for discovery opportunity, and sell that on for cash, shares, work commitments, and a production royalty. We've been doing that quite successfully for 20 years. We also buy royalties, but we can be patient with respect to the royalties that we buy. Wait till we see ones that make sense to us from a financial perspective, because as you know, it's a competitive marketplace to purchase royalties in the secondary market. So that's the two mechanisms of how we've grown the portfolio.
All right. Now, your royalty generation projects in particular are concentrated in the Americas and in Northern Europe, about 60% in Canada and the US alone. Obviously, you have a lot of other operations around the world, but how important are jurisdictional and geopolitical risk calculations in your selection of these projects?
Yeah, that's an interesting question. And certainly geopolitical risk with the mining industry is quite a bit different than if you're selling cell phones, for example, right? And there's a lot of risks that people don't fully ascertain, which would include social license risk, environmental risk, etc. That could be larger in some of the developed countries, actually. It's difficult to get permits, etc. So it's a dynamic equation, but generally speaking, we're driven by prospective geology, because when you look across the board, the largest risks that we face are the technical risks. And so, we're focused on prospective geology, put smart geologists in those terrains, see what kind of assets we come up with. We've done a great job over 20 years.
All right. Now, looking at the mix, not so much the mix of projects, but the mix of commodities, you're about 60% gold right now and about 11% battery metals. Now, we've seen critical metals, battery metals getting a lot of attention in the last year or two. Do you see your proportion of critical metals increasing in the next 2 years?
Naturally, the way the portfolio is evolving with respect to cash flow, we have a lot of near-term gold and precious metal income coming in, but the long-term potential within that portfolio is weighted towards copper. And, of all the critical / battery metals, copper, we believe, is the most important, followed by nickel, of course. Great assets to be exposed to. We've been aggressive at acquiring all the nickel assets that we can. They're hard to find.
All right. And I guess just to close on a bit of an industry perspective, you started at Newmont, which is swallowing Newcrest. So how does the overall industry look to you at this date with this massive M&A taking place?
I'd like to point out that Newcrest was created as a demerger out of Newmont originally. It is quite fascinating to me that they are rejoining forces again. That makes sense to me, actually. But it points to the fact that major mining houses need to conduct acquisitions in order to feed their machine. And it's difficult for the exploration programs in these companies to be able to do that solely. So they've got to do it through acquisition in addition to exploration. It's very likely to continue.
All right. Well, thank you so much for taking the time to speak with us today, David.
My pleasure, anytime.
I'm Ernest Hoffman for Kitco Mining. Stay tuned for more coverage from the Mining Investment Event of the North in Quebec City. And don't forget to subscribe.
Kitco Mining special coverage of the Mining Investment Event of the North is brought to you by EMX Royalty Corp.